The issue of trust now is a topic of great concern in the unregulated crypto ecosystem. The constant news of crypto exchanges and lending platforms filing for bankruptcy has raised many concerns in the hearts of participants and spectators of the industry. With many of the top cryptocurrencies at 4-year low, some of the leading crypto lending firms and hedge funds have run into trouble due to market turmoil, but more so because of their unchecked and reckless decision-making process. The current downturn in the crypto market has driven several crypto firms to go out of business, while many have made severe job cuts to remain afloat. The collapse of some crypto giants makes the crypto industry a more difficult avenue for investment. One sad reality is that in the event of unforeseen and extreme market conditions, the not your keys, not your coins card is played. Crypto exchanges like Celsius and Voyager may be convenient and popular for storing one's crypto assets, especially for novice crypto investors. However, if an unforeseen circumstance cripples such an exchange, your chances of withdrawing your funds might be slim to none. In June, Celsius announced a pause on withdrawal, transfer of funds, and swap on its platform. The crypto lending platform was one of the most popular in the industry before it declared bankruptcy, despite the various promises by the management trying to downplay the current situation concerning the platform operation halt. It turned out the case was worse than many of the investors had expected. Celsius was intended to operate somewhat like a traditional bank, although for crypto rather than fiat currency. Celsius built its business off claims that it was less risky than a bank and would provide better returns. Celsius's bankruptcy is just one among several high-profile crypto insolvencies. Voyager, another consumer-facing crypto lender, filed for bankruptcy protection after it suffered losses from its exposure from lending to crypto hedge fund Three Arrow Capital. 3AC defaulted on its loans, turning things south for Voyager and BlockFi. Celsius is the negative outcome of unregulated markets. People who believed they were making low-risk investments and withdrew their cryptocurrency from risky ones just lost a generation's worth of money. Is the crash of Celsius, Voyager, Vauld, and some other crypto firms the end of financial application of the blockchain technology? Obviously not. Despite the crash of the crypto markets and many coins at their low, regulated financial institutions are increasingly recognizing the opportunities the new asset class can offer. One of them is the banking giant Goldman Sachs. On July 5th, Goldman Sachs executed the first block trade of Bitcoin futures in Asia through the intermediation of GFI Securities, LLC. It also announced it would start offering investment vehicles for Bitcoin and other cryptocurrencies to its clients in the second quarter of 2022 as a part of its plan to introduce support for a full spectrum of digital assets. Also, challenger banks and e-wallets like Revolut, Cash App, Dukascoin, and PayPal now support storing, transferring, and swapping cryptocurrencies on their platforms. For example, Dukascoin Bank offers for trade 18 main cryptos in trading account and 7 main cryptos in retail banking, which means you can use the same account to pay with your Visa or MasterCard for your coffee in Starbucks and to trade crypto. Exchange it to fiat and transfer money directly to your card in just a few seconds. These moves by the big banks are a massive win for the crypto ecosystem, as more and more robust financial and risk assessment methods are used by these institutions in managing their customers' funds. With the current involvement of top banks like Bank of America, Goldman Sachs, and neobanks like Revolut, we should expect more regulation and more secure investment in the crypto space. Investors should not be deceived by the promise of a high yield in some unregulated crypto lending platforms. The companies behind these crypto coins subsidize the yield to make it even more enticing. Remember, centralized exchanges are not banks and they are not federally insured, so don't put all of your life savings in just any exchange or crypto platform. Clearly, investors and consumers are better secured carrying out their transactions with neobanks, standard banks, or full decentralized exchanges. Unlike many of the crypto exchanges and lending platforms that are currently under the financial siege, traditional financial banks and fintech that offer cryptocurrency services to their clients are likely to stand strong and remain transparent and accountable in their dealings. Because these banks have developed frameworks that have sustained them through various economic crises, the experience they have gathered can be useful in managing and assessing the risks that come with crypto assets. Also, unlike many crypto exchanges that parade themselves as giants, some neobanks that offer financial and crypto services are not only backed by the law, but regulated, protected, and insured by the same law. If there are no standard banks that offer that kind of services you wish to invest in as a crypto investor or trader, here are some tips to guide you to invest and trade safely. The first step to successful investing is figuring out your goal and your risk tolerance, neither on your own or with the help of a financial professional, because all investments involve some degree of risk. Scam artists read the headlines too. Highly publicized news items lure potential investors and make their opportunity sound more legitimate. So ask your question before putting your money into something. There is always an option to choose a Swiss bank. They are completely insured in the event of a loss on the Swiss banker's end. This means that your account can be compensated up to 100,000 francs, which is equivalent around to 100k euros. Having that in mind, we should understand that the crypto market is a fast-growing industry with a lot of room for improvement and opportunities. To securely tap into cryptocurrencies opportunities, investing in safe platforms is a must priority. Thank you for watching this episode of On Finance. My name's Ray, and I'll see you on the next one, but make sure you keep yourself up to date by checking all of our social media. Goodbye.